Hey folks, how's it going? This is Terra. It's my weekly update. I'm going to keep this one short and simple. Just so you know, I'm working on a new capture setup, so my videos will be clearer and a bit easier to see, a bit more YouTube friendly. Apparently OBS doesn't want to capture my shit properly, so okay, whatever, I'll figure something else out. But yeah, so last week we were around here. I expected us to possibly go up, or in the short version was basically any dips worth a buying, and I wanted us to go up and continue up higher. That's pretty much what happened straight out of the gate on Sunday evening. We dipped straight into my area and we just rallied for 3 days straight. And dips were indeed for buying. It was FOMC week, and if you know anything about FOMC, the central banks and the Fed and all these guys, they do not decide the rates. The 10-year chart does, the 10-year bond yields. They are what determine whether there's going to be a rate change or not. And that chart showed there was going to be a pause. We got a pause. And I didn't expect this type of sell-off, this size of sell-off we got on Thursday. I did expect the sell-off, though, and easiest reason in the world. When you pump into FOMC, you're going to sell off. When you dump into FOMC, you're going to pump. You can bet when your chart does this, going into a major red folder news like FOMC, you better believe you're going to drop out of it. And that's exactly what happened. And we ended up finishing bullish on the week. Well, sort of bullish, more of a neutral candle. Big wick to the upside, but we finished bullish. It's I have blue and white, but it's a green candle essentially. Same with the monthly. It finished green. Close was higher than the last one. We wicked up to the upside, so could go either way. I still maintain my bullish stance. I don't think anything has changed in the grand scheme of things. I think we've just come out of a cycle low. The next cycle low isn't until the 11th, the OPEX in March, middle of March basically. This yellow line here is part of that indicator. It's the midline, so I don't expect there to be a significant drop until at least midpoint. And this trend line here is also part of it. We have closed below it, but I wouldn't be surprised if we basically just recover it this coming week. We'll see. I'm kind of on the fence 50-50 of what this coming week's going to do. I'm still leaning more towards bullish everything. We've got higher highs, higher lows. Everything is telling me up. 2 days, Thursday and Friday of last week, doesn't change anything for me. Not even close. So, yeah, there are some significant candles, but everything's pointing up still, as far as I'm concerned. And that's really it. There's not really much more to it. I still maintain dips are for buying. I would say take it easy to start the week. We are just below the point of control, so I do expect us to go up. I'm basically going to, you know what, I'm going to do something I haven't done in a couple of weeks. I'm going to do my analysis from the start with the isolator and start it over. So here on the daily, I'm going to load up. Let's make this a little bit clearer. Right, let's get rid of you. Let's get rid of you. And get rid of you, and you. I'm going to keep this as it is for the time being. I'm going to go into my fair value gaps and I'm going to turn on analysis mode. Unmitigated only. And it's going to do all the untouched chart-based fair value gaps. And we're on the daily and there are none. There are no daily fair value gaps above or below. We've got this tiny little baby one down here, but it's so small it's pretty insignificant. And there's nothing until all the way back here down in June. You can ignore that. It's too far away. So we've got no daily liquidity pools in terms of fair value gaps. We go to the 4 hour. See what we've got. We should have one. We've got a mitigated one above us, which I'm going to mark out with the isolator actually. But yeah, look at that. We've got nothing on the, because of this wick here, we've got nothing on the 4 hour either, above or below. Interesting. So what I'm going to quickly do, I'm going to put this to mitigate highlight so we can see the ones that have been tested. There we go. Look at that. Beautiful. Funnily enough, 2 weeks ago, these were the levels I wanted to come down into, and we reversed out of them. We respected this one here in the middle, and now we've got one to the upside, which we are respecting. We hit midline and continued to sell off. So, interesting. I'm not entirely sure where we can go next. So what that means is wait it out. Don't guess. Just wait for the market to kind of show a clear direction. Even if that means a couple of days of not trading, then you don't trade for a couple of days. That being said, you can always do the orb strategy, which is something I always always swear by. Let's have a look at 1 hour. Let's go to the 1 hour. See what we get there. So we get that 4 hour is also a 1 hour there too, and we're respecting these ones. We're bouncing out of these guys, which have been held up tail end of last week pretty well. So yeah, we're bouncing between levels above and below, which is probably just the market just digesting a pause. Well, I mean, is there much more to say than that, really? If we look at our actual structure between ES and NQ, we are in down structure down to the 4 hour, but we're still in up structure on the actual ones that really count in terms of overall market direction, the daily, weekly, and monthly. Everything's still up. We're still shifting to the upside. You have a change in the state on the 1 week, but it's the only one that's really showing up here, so it's not significant enough on its own. We're actually breaking structure to the upside on the 1 month on ES. That's surprising. Yeah, I would say the intraday smaller time frames are just now chop fest and unclear. So overall, market is still in an uptrend. I don't think anything is going to end in that regard. And what I'm going to do, I'm going to quickly... Ooh, that's not the one I wanted. I wanted this one. I'm going to write something out. This is basically what I'm expecting for the year. I realize I've never really talked about targets. When the crash happens, which I think it's going to happen this year, I don't think we're far away. I think we're in the final leg of a euphoric blow off top. And when everyone doubts it, and I'm one of the few people out there who's saying, you know, I'm not going to be the only person. The people that I follow and the circles I follow, they tend to, we all tend to align on this. I would not be surprised if that's where we end up. I think this is the level of drop we're gonna see in the S&P. Nasdaq, I wouldn't be surprised if the Nasdaq actually makes it up to 30k. I don't know though. When it drops, poof, maybe sub 10. Let's say 7k to 9k. Honestly, I tend to focus my actual like big top time frame market analysis to here. And we are basically rotating from equities into commodities. That's the shift that's going to happen over the next decade. And you want to start looking at the metals. Obviously, we've had gold and silver just kind of ripping people's faces off lately. That's going to continue. Now, I don't think it's going to continue to quite the extent that it has been recently. I mean, we saw 30% drop in silver in a single day, which is just obscene numbers. And it's kind of funny. I told my dad to buy gold and silver a year ago, and we've just been sitting on some physical bars. And he's been wondering, like, what do we do? I was like, just wait it out. Honestly, it's barely begun. It's going to be volatile as hell. And yeah, just wait it out. I wouldn't be surprised to see silver $600 silver. And things are going to get real choppy before then. Honestly, this is not my theory, but I wouldn't be surprised if we see gold revalued to 42k. And this is Camel Finance. What's the word I'm looking for? Analysis? Is that the word? Speculation? Theory. Let's call it a theory. This is a Camel Finance, and I highly recommend Camel Finance. He's one of the GOATs. You cannot do anything wrong by following that guy. But yeah, these are the sort of expectations I have. Beyond that, you know, I'm just waiting it out day by day. So I'm going to put that up there for now. And back to our analysis, what I'm going to do now. So we've got this. What do I want to do here? We've got this big old breaker block here. That may be better off over here. Let's have a look. It would be. Let's put this here, and I'm going to update it. 5. I'm going to update it to the 4 hour. Okay. Yeah, I think that's a bit better, actually. Maybe I should have had it on that to begin with. Okay, so that's where I'm going to keep that one. As for this top one, we've swept it out. I'm going to get rid of it. block number 3. Let's just get rid of it, clear it out. I'm going to keep this one on the chart for now, because if we come up into here and we don't close above it, we're not going to close above the 4 hour. You know what? Now that I look at it, the gap's what I care about moving forward. I'm overcomplicating this. That gap, this gap, I wouldn't be surprised if we come down to this level, touch this weekly trend line that we got going on here. I'm going to keep this one from the 12th of December. I'm going to keep that where it is. I think that's an important level. If I put my profile back on, you can see we had multiple weeks where the point of control was right here through the middle, right where we finished the week. So I wouldn't be surprised if we kind of fluctuate above and below this kind of level through here, through the middle. That's a terrible line. Let me draw that again. There we go. Something like that. This is kind of like the fluctuation point. So we're going above it, going below it, going above it, going above it, right? I wouldn't be surprised if we dip down into here, hit this trend line, start continuing the up move. Honestly, I don't think we're done yet. And is there much more to say than that? I don't really think there is, in all honesty. I think it's quite a simple one this week. Last week we had a pump and a bit of a dump, and we finished in a bit of an undecision environment. We took out liquidity to the high end. We've still got a couple points to the low that we could go to, but structurally nothing's changed. Therefore, the analysis hasn't changed. Dips are for buying. And I could go around in circles saying this, but I will not do so. In the meantime, what you guys can do is you can keep an eye on SMTs, because we do have this yearly SMT at the top here, and it's also a quarterly and a monthly, and I think even a weekly. Let me get rid of these just for a quick sec. I'm interested. I don't think it's a weekly. Shouldn't be a weekly. No, it's not a weekly, so I think it goes down to monthly, quarterly, and yearly. Yeah, monthly, quarterly, and yearly SMT at the top here. I do not think it holds. I think we continue up high. In fact, I think the NASDAQ actually has a bit of a catch-up trade. If we go over to ES, I think we just hit a cycle low like we did on NQ, and that we're continuing higher. I mean, look, higher, low, higher, higher, higher. We broke through the top, and these wicks to the downside, man, I think we're going higher. I don't think anything's changed. And these sort of violent flushes to the downside are just wiping out intraday traders, getting rid of them before the final big blow off top move, which I still think is to come, and I think we're in it. I think we're in the blow off top move now, and it's just getting started. So I don't think there's going to be a significant downside move that's worth keeping an eye on until this yellow line, which is around the middle of February, around the 17th. After that, I don't know if you can see that down here. Let me make it a bit bigger for you. This is a work in progress, my cycle theory indicator. 11th to the 23rd of March here, the next daily cycle low. The next weekly low is between April and July, which kind of lines up with the end of April, end of March sort of time frame, but I wouldn't be surprised if we have a daily low. And I think we've just had our weekly low back down here in November. I think we're going to go out into the year, and it's not until the later half of the year where we start moving down into the yearly cycle low. But the yearly cycles have gone a bit jank lately. So anyway, I said I wasn't going to ramble, and here I am rambling away. But yeah, so here are my expectations for the year. I think we're bullish until at least 7,200. At least. We're not far off it. We're only 200 points, $200 away. I think we go up closer to 7,500. And I think NQ has a catch-up trade up to close to 30k. I wouldn't be surprised when we're this close to it. I wouldn't be surprised. And then the drops that we're going to see are like 70 to 80%, and they're going to be brutal. And that's when you don't want to be in equities. You want to be in commodities at that point. And anyway, that's me done for the day. In times like this, when things are a bit kind of unsure, trade the orb. That's what I do every single day anyway. Let me turn off, clear that out. You see here we had the orb form, and we started closing up below it, and we sold off down to the downside. The day before we had orb. It was a big orb, and we sold off down to the downside. I think every orb trade for the week was positive. If you just wait for the 15-minute at open, wait for the 9:30 to 9:45 candle, and wait for a significant. You can do a 5-minute close. That's perfectly valid. I wait for a couple of 1-minute closes outside of it, and I start looking for a position there. So on Friday, took 2 trades actually in 1 minute. I took, when we rejected off of here, sold down, and over here there was another trade. So we broke out, retested, and when we started failing outside of it, there was another trade. Could have taken it anywhere around here, stop loss there, just sold down to London low, or you could have held it for longer. That's what, 131 points. Yeah, perfectly. 135 points, perfect. All right, there's your orb trade. Wait for the close outside. You want to be safe about it, so wait for the retest. Here I did a video in the week trading this kind of area, like straight trading, I didn't take any trades, but explaining this area live. When you get a breakout, wait for the retest to also fail outside of the range. That's how you know. Like here, we broke out, we retested, and you could have gotten in here with these candles. They started failing and closing outside. You could have gone in there. You go to the nearest structure point, which is here. You would have been fine. And you could have waited a little bit longer for this low here to be broken. I don't know if you guys can see that. Let me zoom in for you. But then we had moves back up to the upside. Wait for closing outside. So we get this nice big rejection here. We start closing again. You could have taken any of these candles here, especially this one. This candle here. See how it closed below these lows? There's your real entry. That's what I would have waited for, and I would have gone there. You go all the way down to here, and there's your 35-point trade. Size appropriately, and you're golden. That's what you can do intraday when overall analysis is a bit kind of all over the place. You have a nice big market maker model essentially. We could come down, take out this low, hit this trend line, hit this region here, and then continue up. So a little bit of a dip. Maybe the week will do something like this. That would be a guess. Not really an expectation. It is just an outright guess. Maybe something like that. All right. Anyway, that's it from me. I'll see you guys for a midweek update and catch you later. If you like any of these indicators, all of these indicators are my own. If you want to test them out, links in the description, and I'll see you later. Thanks so much.